Good morning, trading world. It is May 1st, 2023, 8:30 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook feels like a correction is on the horizon, but this one may be practice for a more serious volatility to display later in the summer. A lot on the docket this week in trade. First, based on implied volatility, we can see the most exciting days are going to be, and let me bring the option chain over and show you guys what I'm looking at. When I say let me change this to this. It's different in the actual futures, but today is kind of calmed down. But on the futures, we can see that the most volatile day is going to be Wednesday, followed by Thursday and Friday. Friday being the next most volatile day next to Wednesday. If we go to the SPY, the SPY is a little different. One of the more exciting days is going to be today, followed by Wednesday, Thursday, and then Friday. And this is all obtained just by looking at the implied volatility in the option chain. Now, most traders look at the VIX backwards. When the VIX is at its lows, this is the time to worry and start hedging. Most traders look for rises in the VIX, but by the time the rise comes, it's too late to hedge, and trouble is usually here or on the way. So again, when VIX is cresting at its lows, this is the most dangerous time in the market, because VIX has a way of exploding to the upside like a birthday surprise party. And you don't want to be on the other end of that surprise. The next thing from a technical side is we are not done with upside moves, no matter what happens today, until the daily, weekly, and monthly go negative as far as momentum and trend and come out of their rest areas. Those moves to the upside could be a retest of where we are now, or more likely the 420 area. But it's not done until the bigger time frames go negative, and right now they're all on the rise. So this week we could easily see a drop back around the or below the 410 area this week. And then fly back up toward the 420 in a matter of days, if not hours. So be ready. In the title, I said it feels like a correction is on the horizon. Also, in my opinion, whatever happens, I don't think it will stick, whether it's down 100 points on the S&P futures or up 100 points on the S&P futures. I don't think it will stick this time. The weekly outlook is actually bullish, with a retracement around the 410 area on the week. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish, which means don't put a whole lot of faith in the primary thesis, because there could be a big dip into the alternate thesis at any point. Make sure you look at the calendar, because there's a lot going on this week. from Apple's earnings to a host of economic data drops to the biggest event being the FOMC announcement. Also, keep an eye on the dollar as it may have found a bottom and start to consolidate a little higher from here. I will keep an eye on that because as the dollar climbs, equities will have to give way or fall, making that balance out in that two-way trade or that pairs trade. Because remember, everything is a pairs trade when you're looking at dollars. Your equity, where it is versus the dollar. This brings us to the key levels for today. Let me bring those up. Before I bring up the key levels of the day, I wanted to make a note and show you where we are as far as the market maker's expected move. As you can see, the black line is where we're starting the week at. The upper edge of that market maker's expected move is around the 423 area, and the lower edge of the weekly market maker's expected move is around the 408 area. So these are definitely key places to keep an eye on, or as targets of where we are possibly headed on the week. All right, here we are back with the key levels of the day, starting on the resistance side. We have our jack resistance at the 415 to the 416 area. This is going to be a place where rejection happens maybe once or twice before breaking through. Then we have our queen, our queen resistance area, 417 to the 418 area. It's likely a place we may make it to today. And then our king resistance, 419 to the 420 area. This may disappear, or hopes may disappear from getting up to here, to this level, maybe today or tomorrow, but it'll come back toward the end of the week, and it'll come back in sight pretty fast. On the support side, we have our jack support at the 414 area. This is where I expect to find lots of support right here, that low 415 to that mid 414 area. Then we have our queen support, 413 to the 412 area, and then king support, 411 to the 410 area. Not sure if we test much of this today, but it is in the cards for later in the week. The main thesis for today is bullish, closing above the 415.93 with a projected target high of between 416 and 420. The alternate thesis is bearish, closing below the 415.93 with a projected target low of between 415 and 411. The main channel we're in is between 397 and 416. Last week, market strength and breadth opened gap down and rocketed up on the morning and stayed at high levels the rest of the day. I expect strength to open where it left off to maybe a bit weaker, being range bound on the day, pushing price action to retest or push highs of the overnight and pre-market session, but showing a clear bearish divergence that plays out through the middle of the week. We are still in irrational mode due to a gap in order flow from last week, so anything is possible right now, like climbing higher. We do have dissonance between the technical side, which is bearish, and the quant side, which is bullish. That brings us to the scenarios of the day. All right, here we are with our first and most probable scenario on the day is going to be our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or King support before going back up with the same energy of force we went down with the first part of the day. This is our rounded reversal day type structure. Also, be aware of our vice versa alert, which could be as follows. We get maybe a little bit more of a deeper pushback pre-market, and we push up toward that previous close, and then find our midday chop somewhere around the Jack or Queen resistance area, and then the second part of the day head back lower with the same amount of energy or force that we came up with earlier in the session. Now, the one thing that I didn't do right here is that this could just as likely happen where we get kind of a pre-market push back above that previous open, and all of this takes place above that previous close, where we get a look something like this, where it continues up pre-market and we get a phase something like that. So that's how things could turn out to look on the vice versa alert. All right, our next scenario is going to be our expanded range A structure. We could get some morning weakness, seeming like we will stay weak on the day, but reversing and going back to retest or push the highs of pre-market. So this is going to be our expanded range day structure, and meaning we're going to cross and have prominent closes on both sides of the previous close. So that is our expanded range day structure. All right, our last scenario is going to be our trend day down day type, meaning we open gap down and start with a push back towards the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible Queen or King support area, and usually on the second part of the day or second half of the session, we usually start out looking to continue that primary trend of the morning, but at some point it turns into a head fake and we get some type of minor rise or rally either at or going into the close. So that is our trend day down day type. Also, because of all the economic data drops today, you need to be aware of the vice versa alert on the trend day, and that is us actually having a trend day up, which is, it's not a big worry, but with the econ data, you never know, so I'm putting it out there. So we could have a report kind of give us a big boost, and then that way, coming off the cash open, we get a push back toward the previous close, represented by the blue line. Find support on or before that previous close, and then get into the uptrend of the day. Find our midday chop around either possible queen or king resistance area. Get our head fake coming out the second part of the day, and it is quite possible we get that kind of fade going into or at the closing. So those are the scenarios to be aware of. This is going to be a crazy week. It's pretty much guaranteed. The implied volatility is speaking to us in that way. And then plus, it's been over 3 weeks, or about 3 weeks, since we've closed outside of the market maker's expected move. Last week, we briefly leaked out of the bottom side of that weekly market maker's expected move, but it was very brief. I do expect that the market goes rogue again and becomes inefficient in pricing in that risk, and we start to see some closes outside of this market maker's expected move. I'm almost expecting the first close out of it to be to the upside, and then probably some surprises out of the bottom side of it. So those are the things that I'm preparing for today. Coming into the week short, and I'm probably going to stay short all the way through the FOMC announcement, at which point I'm going to look for some bullish positions to get long thereafter. So with that, your most important job as a trader is always to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and also the risk in the current market conditions. We then manage that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.